Hello and welcome everyone to the Week Ahead Commodity Report, where we of course will be reviewing the markets for the week ahead. As July comes to a close and we head into August, rapidly surging inflation, rate hikes and recession risk, they are now emerging as the three biggest and most explosive macro themes driving the financial markets. Throughout this month's report, we've routinely highlighted that the commodity markets, they will move in very predictable ranges, presenting savvy traders with a series of highly lucrative week-to-week opportunities to capitalize on the short-term macro-driven volatility. Once again, everything we identified with you has played out as we predicted. The great news here is that that trend is set to continue throughout the second half of 2022 as inflation, rate hikes and recession, they take front and center stage. Historically, the summer months, they have been considered to be one of the most lucrative periods of the year for commodity traders. Once again, this year, it's living up to expectations. There's no denying that the second half of 2022 has been monumental for monetary policy as central bankers across the world ramp up their fight against rapidly surging inflation, whilst also acknowledging that inflationary pressures, they could persist for years, driven in part by the war in Ukraine, worsening supply chain disruptions and effects of COVID-related shutdowns in China. Last month, the Federal Reserve, they dropped a bombshell to the markets by raising rates by 75 basis points, with Fed Chair Jerome Powell signaling yet another more jumbo-sized rate hike ahead. He definitely wasn't kidding. On Wednesday, the Federal Reserve, they raised interest rates by another supersized 75 basis points for the second month in a row. The latest rate hike, that means that central banks are in the throes of the most aggressive cycle of monetary policy since 1981. It follows a 50 basis point rate hike in May and a 75 basis point rate hike last month, the first of that magnitude since 1994. After hiking rates by 200 basis points in the last 60 days, Fed Chair Jerome Powell signaled that another supersized hike could be on the cards for September. However, it all depends on the macro data. Between now and the September FOMC meeting, there are two US employment reports, two inflation data releases, and the Jackson Hole annual symposium, which all have the potential to move the market significantly. As the Federal Reserve continues to raise interest rates in its fight against the highest inflation in more than 4 decades, several key economic indicators are beginning to flash warning signals of a slowdown. Official figures released on Thursday, they confirm the US economy has plunged into a technical recession in a sign of things to come for the rest of the world. The official measurement of a recession is 2 successive quarters of falling GDP, and according to the Commerce Department, US GDP fell 0.9% on an annualized basis in the second quarter. This follows the first quarter GDP data showing the US economy shrank by 1.6% in the first 3 months of 2022. The fresh figures illustrate the scale of the damage historically high inflation is having on the world's biggest economy, while simultaneously eroding income and purchasing power for consumers. If history has taught us anything, the one thing that we do know for certain is in both scenarios, whether that's persistent inflation or a recession, ultimately this presents an extremely lucrative backdrop for commodity prices. In fact, following last week's data, gold prices, they posted their biggest weekly gain in 5 months, with silver prices notching up a 9% weekly gain. The bullish momentum that also spilled over into other commodities, with copper, palladium, platinum, zinc, nickel, oil prices, to name a few, all soaring to fresh multi-month highs. Extraordinary times, they do create extraordinary opportunities. Right now, this is a trader's market packed with an endless flow of back-to-back lucrative trading opportunities to generate huge life-changing wealth. Whichever way you look at it, the case for commodities in a well-diversified portfolio has never been more obvious than it is right now. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So first of all, going back to the start of the week, where we talked you through the ranges for this week and the opportunities that we felt were presented for you. So we detailed out for you on gold asset of the day earlier on last week, the ranges that we were looking to accumulate, 715 down to 1710, 1705. As a result, we did see the gold price dip down towards those levels in the lead up to Wednesday's FOMC statement, again providing you with a great opportunity to add further exposure to this market, to add on those dips. And we have seen the same playbook yet again play out essentially over the last week, as we saw in the European Central Bank announcement as well. So effectively what you see is pressure to the downside on the metals and commodities as the markets move into risk off prior to a central bank interest rate hike, as we saw the previous week with the European Central Bank announcement. We saw gold prices in the lead up to that break all the way down to 1680. Then had a slingshot breakout, afterwards a 500-point breakout to the upside, which enabled us to very quickly bank a windfall amount of profits, not only on gold, but also on silver, also on copper, and also on oil. Again, it's been exactly the same playbook again, going into lead up of the FOMC statement as well, ahead of another central bank increasing rates. You've seen pressure to the downside with commodities. Traders are going into risk off. They're getting nervous ahead of an interest rate hike. Is presenting the fantastic and perfect opportunity to add further exposure. And then what we've seen here is, again, over a 500-point breakout to the upside the following week on gold as well. Very straightforward opportunities for you to capitalize on. What we're now observing a lot out there, after you've already banked a windfall amount of profit over the last few days, is many traders, they're now getting their delayed confirmation. They're now getting into the move after we've already seen over an 800-point breakout in the last week for gold. Silver prices, they're already up 9% here. Copper prices in the last week, they're up 8%. Of course, we identified and talked you through these trade opportunities with you over the last couple of weeks. Feel free to go back and watch our reports over the last couple of weeks here, especially last week's commodity report, where we put copper on your radar, where hedge funds and money managers have continued to accumulate copper positioning over the last 3 weeks now. And the overall macroeconomic backdrop was also very supportive, especially with the China infrastructure spending that we've seen being announced over the last week. And with that, copper provided with a perfect setup to get long this market. Again, it's broken out 8% in the last week. We identified this with you on last week's commodity report. So we've taken the opportunity to bank a windfall amount of profit here over the last few days as copper has accelerated to the upside. Silver, of course, we talked you through last week as well. Areas of liquidity here down towards that $18, $15 and sub $19 per ounce level. We've, of course, had over a 9% breakout, almost 10% in fact, to the upside in the last week. So our silver trade is doing extremely well at this point as well. And we've continued to have exposure here on platinum, which has had a nice breakout over the last week, almost a 1,000-point move in the last week as well. So essentially, crude oil too caught a bid. In fact, we banked over 500 points profit on Friday with our clients at the Gold and Silver Club with crude oil, with the spike out to 102 US dollars per barrel. Again, these markets right now, they are a trader's market. Day to day, it's providing you with volatility, where we're seeing gold break out 500 points within a few days. Oil easily, day to day, it's breaking out 400 to 500 points, enable you to sniper in nice and low and capitalize on these breakouts to the upside and capitalize on the volatility. Silver, platinum, copper, crude oil, gold, they've all had explosive moves over the last week. Everything that we talked you through step by step, our expectations, has yet again played out here. So I do hope that many of you have been able to benefit off the back of these surges in price, everything that we've expected and anticipated and actually talked you through on our week ahead commodity reports and gold asset of the day and our commodity reports over the last 2 weeks here. So I do hope that many of you have also benefited massively off our analysis. We're seeing one of the greatest wealth transfers ever in history in this new era of economic change, which we find ourselves in right now, with rapidly surging inflation, the cost of living rising, energy, gas and food bills all soaring. It's once again an important reminder that you can't just rely on one income stream. If your goal is financial freedom, then you need to start building multiple streams of income. The importance of having an essential income generating skill like trading, that's no longer a luxury, it's now a must-have necessity. In the words of Warren Buffett, the best investment you can make is in yourself. You can never lose money when you invest in yourself and when you invest in new skills. If you want to upgrade your income, then you need to upgrade your skills, and there is no better skill than trading. If you want to maximize your money-making potential and thrive, not just survive in these highly macro-driven markets, then you need to adapt your strategy so that you can grow your income to massive levels. If you want to gain the ultimate edge to supercharge your wealth in these highly profitable markets, then you need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach, having access to the right data at the right time. It is the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there, using outdated technical analysis and gimmicky technical indicators that will not work. We're no longer in the 1980s, we're in 2022, and the age of data. Every industry right now, including the trading and investment landscape, is being disrupted by data. In this day and age, if all you're doing is relying on outdated technical analysis and gimmicky technical indicators, then you're guaranteed to get crushed and chopped up in the these markets when every other well-informed and well-educated trader out there is creating life-changing wealth. If you want to change your results, then you need to change your thinking. Never underestimate what you can achieve in the next few months from now with the right skills, knowledge, and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP.